Hey everybody, it's Edwardo here with your Blacks in Bitcoin update. All right, so I think I'm going to start off with what most people call doom scrolling the timeline, the Twitter timeline. I like to think of it as boom scrolling because with Bitcoin, business is booming. That's right. Just like, what was that? Antonio Brown style? Yo, 39,000. We've survived the bear market. This actually brings me to my topic for today. I mean, look at this. We had a few bad days, 3 days, and we made almost all of it back up. It went from 40,000 down to 30,000, and people started panicking. There's a lot of new money out here. Some of us are Bitcoin vets. Actually, I don't have that. Actually, yeah, be right back. Yeah, here we go. Love this GIF. Bitcoin vets right now. We're used to it. We're used to the HODL coaster. It goes up, it goes down. It always goes back up. Now, we're not too concerned, but this brings me to what I want to talk about briefly today, which is the nascent war between the hodlers and the traders. Now, we never really had to worry about this much before because it was mostly just hodlers, true believers. As I'm sure I'll mention more than in a few times, I've been hodling Bitcoin since April 2013, about $88 per. It has not been a smooth road at all. This thing is volatile as mug. I mean, you can even check the historical charts on, coinmarketcap.com. I think they've cleaned up their act some. People also recommend CoinGecko. Anyways, these guys, when you see like the overview, I mean, it's had a wild ride. This is the all-time chart. I mean, look at this. From when they started charting it back in about, just after I got in there, 2013, about 106. And it's funny because I first heard about Bitcoin I first drank the Kool-Aid on Bitcoin around $50 per. When I finally got in there at 88, I thought I missed it. Oh no, it's too much. But nah, it's straight. Anyways, I mean, we had some high highs and some low lows. I mean, actually, it looks like a blip in comparison, but in 2013, we had a huge run up to about, was that 1,100? It felt like it was about 1,200. I guess it was only about 1,000 and some change. And then it went right back down, and then it went just down. Like 2015, summer 2015, it was about 230. I remember because I started a job around June 1st. Yeah, look at those low prices. And I bought some. Look at 225. Ooh, goodness gracious. I bought some at 229 and started handing out $3 gifts around the office. Here, you get some Bitcoin. You get some Bitcoin. You get some Bitcoin. Those $3 now are worth about $400. It's like a car payment. Anyways, we're used to the HODL coaster. It goes up, it goes down, but it always goes to the right. And most importantly, when you're evaluating Bitcoin performance, if you are in this for the long haul, like all us true believers are, because back here, and look at this scale. It looks like it's damn near zero, right? I mean, Bitcoin had a very real chance of going to zero. It was not a sure bet like it is now. It did not have institutional backing behind it. People like Warren Buffett were calling it rat poison squared. I mean, my God. So, anyways, what you really want to look at is the log chart. Because I got into a bunch of pointless discussions over the last week about how, and not really referring to the log chart, which I should have, about how logarithmically, as in a percentage of its overall price, this was barely a blip. Look at this. I mean, yes, $10,000 per Bitcoin sounded scary. We've seen 80% dumps before. This is nothing. Matter of fact, look at 2014 in particular, when it went up to a little bit over $1,000, rivaled the price of gold for the first time back then. Wasn't that so quaint? As in gold per ounce. And then it dumped roughly 80% down to 223. Goodness gracious. You survive one of those, I'll put some hair on your chest. and then it's kind of stayed low for a while. I mean, we've gotten used to these, and then that's why I covered the golden bull ratio in the last episode. Learn these things. It's important. These things go through life cycles, and now they're becoming more and more predictable, somewhat like math. Now, when it comes to human emotion and what drives markets and the psychology behind that, I don't know. All I'm saying that is that from the sample sizes we have already in a very young market, and that's what I really want to stress to you guys. This is a very nascent market. You know, Bitcoin has only been out for barely 12 years, and when the entire cryptocurrency market, what is that? So Bitcoin's market cap, is 430 billion? It's not that much. Hold on. Coin market cap overall. Oh, well, I take that back. The overall market, wow, that really took a dump, huh? Looks like the overall total market cap of, am I reading this right? I am reading this. Interesting. Okay. I did something wrong here. Okay, this is much better. I think I broke coin market cap. Anyways, CoinGecko, as you can see, $730 billion in market cap for Bitcoin. This thing is not going anywhere. We're back over 39,000. Almost made up the entire losses for the week. Over $1 trillion in market cap for the entire 6,100 coins that are out there. There's probably somewhere in the lines of 8,000 to 10,000 different cryptocurrencies. But as far as ones you can actually count and track, 6,100 over here at CoinGecko. And look, if trading's your thing, and I'm part of this group called Crypto Coin Trader, I mean, do you? I am team enjoy all the things. I'm a hodler. I'm a Bitcoin permabull. I'm not going to try to time the markets or read charts, do chart analysis, because to be honest with you, a lot of this is bullpucky. When you have, as an entire asset class, barely more than what BlackRock, one hedge fund in itself, has an assets under management, it's a very thin market. You can't apply traditional technical analysis to these highly volatile markets with thin market depth like Bitcoin and cryptocurrency in general, in my humble opinion. I mean, I can barely read a chart half the time, and I know people love charting and trying to predict stuff, and do you. I'm just saying it might be a bit of a fool's errand when Bitcoin on a day-to-day basis is fairly unpredictable. Now, if you zoom it out, I've been told the 200-day moving average may be a little more indicative, but I'm a hodler. If it goes up, I buy. If it goes down, I buy. I am buying price agnostically till at least $1 million per Bitcoin, because if this sucker is going to $5 million per Bitcoin, long-term, everything is profit for me. Anyways, part of a group on Facebook, Crypto Coin Trader, and at the slightest hint that Bitcoin is going down, people started, heading for the exits. Oh, it's too, I'm getting out, we're going to the next correction. We're going down to, someone actually said we're going down to 3.5K. My goodness. And so I had to find some charts to throw a chart up in their face. For all those who are waiting for a 60% plus correction, keep waiting. Just this last dip saw an increase of whales, 1,000 plus in their Bitcoin wallets, so about $30 million worth of Bitcoin, buying up the dip. While the scared, new, and weak hands tell you to sell or not buy, the crypto rich are doing otherwise. And I got it from this tweet from our boy Bitcoin Archive. I mean, look at that. Whales with more than 1,000 Bitcoin in their wallet were buying up all the scared, weak money. I mean, what are we even doing here? Like, while everyone else is going down, they're buying up. So it just tells you something. If the institutional money, if the big boys are buying all that money, then they and the people who run the financial systems in this country, I don't know. This might be a clue. They're not in the business of being broke. All right, and so let's do a little quick boom scrolling. I survived the Bitcoin bear market of 2021. Grayscale taking out full page ads in the Wall Street Journal. Hashtag mama, we made it. More adherents coming on board. Catch the bounce. This is a very key statistic here. Gains after a correction. In 2017, that bull market had 9 corrections with plus 153% average. Average gain after a correction. Look at that. That's just sick. Their peak price was 20 times the previous all-time high. We are now only 1.65 times the previous all-time high. All right, read for my calculator. So if our previous all-time high was, let's just call it 20,000 even, right? And we can expect up to 20x. This is in line with our stock-to-flow modeling. Stock-to-flow modeling is putting us anywhere between 55K to 288K, and we're running ahead of that. Also from Bitcoin Archive, the homie. We are in a Bitcoin supply crisis. Investors continue to move Bitcoin off exchanges and into cold storage. The most fundamental law of economics, supply and demand at play. Lower supply and higher demand equals Bitcoin goes up, up, up. What does it mean they're moving Bitcoin off their exchange into cold storage? Look, these guys are buying, institutional investors are buying for like pension funds and unions and all these big organizations that were relying upon this money coming into their 401ks and IRAs and predictable stores of value for when they retire. When they're buying Bitcoin, they're not looking to flip it. They're not looking to day trade it or swing trade it. They're buying to hodl it. And so and the first rule of Bitcoin, not my keys, not my wallet. When they get these vast sums of Bitcoin, they're taking it off exchange. They're putting it into cold storage, probably onto some ledger or device or an air-gapped computer, and they're keeping it in a very safe place. So that when time does come to cash in a little bit for retirement, it will not be compromised. So let that be a lesson to you, boys and girls. $10,000 dip it's barely a dip, more like a blip in Bitcoin's life cycle, especially if it lasts less than a week. Strap into the HODL coaster and enjoy the ride. All right, one other thing I want to, and just to kind of put a finer point on all this, I'm gonna read you a quick email exchange I dug up. January 5th, 2014. One of my boys from my previous life in poker said, we're talking about Bitcoin. My plan is to exit out completely by the end of the month. Watch what happens with your boy when China on the 31st comes in, then swoop right in away if it's all good, or wait a couple days while it goes down, then buy back in lower. I know you hate this shit. I do. But it doesn't make sense not to hedge China coming straight at my dome. Thoughts? And I write back 4 minutes later. No sense trying to talk sense to an action junkie. By staying ridiculous long on Bitcoin, I'll always look like a genius. So I'll just keep up the illusion. We'll pay extra special attention for the fluctuations around then, though, but just have to live vicariously through you. So, as the story goes, I'm pretty sure he got out of most crypto by the end of 2014, especially when we started bearing out, and I just hodled long and strong. So, if you're a trader and you're looking for entries and exit points, stuff like that, just be careful. It is dangerous out there, and you probably know infinitely more than what you're doing than I do. But for those who like to hodl, those who like to play it safe, those who believe in the long-term future of Bitcoin, stay long, stay strong, hodl if you hear me. I'll see y'all next time.